All right, well, it is 2:30. How's everybody doing? I see Amy, Cambry, Brooke. Can anyone hear me? If you can, thumbs up.
I can hear you.
Hi, Amy. Thank you. How are you?
I'm good. Sorry, I'm walking and there's a lot of car traffic.
No worries. No worries. All right. I see Brenda Foster coming back in. Brett typically kicks us off at 2:30, so I want to be prompt. I know that we're recording this, so wanted to kind of go over a couple of things that he shared with us. And I don't know, Niale, if I have rights to share my screen. Hey, Matt, I'm so glad that you could join me. You might be my counterpart today. Come off mute. It just might be you and I, buddy. Hello. How are you?
Are we waiting on Brett?
We're waiting on Brett, but I'm getting started. It is 2:31 p.m. So let's rock and roll. All right, let me see if I can share my screen. And I am going to share some of the statistics that he brought in, and you and I can go through this entire piece together.
Perfect.
All right, can you see me? Yeah.
Yep.
Awesome. So, you know, this is the report, and I'm not sure if everyone is aware that they have access to this. You can actually see the live updates every single week on what the market is doing. And I love it a little better than market stats, just because on market stats, we wait a full quarter to see what has happened in the rearview mirror. And oftentimes, I think this shows me just a little bit more about what we can do and how we can actually go after a particular market. So just looking at what we have right now, looking at the active under contract, coming soons. What was interesting to me about this particular, and this is actually in Fulton County. So every tab does identify which county we're focusing on or which county you want to focus on. But what I noticed is, look at back when we started back in April to May, the active contracts, what's on the market has actually gone up in Fulton County. So thumbs up on that. I thought that was excellent. That was the one big piece that stood out for me. And when I looked about at April 25th and also just, at the weekend coming up here today, just seeing the steady increase, that's a little bit different than what we've been seeing. What are your thoughts on that, Matt?
Yeah, I like it. If you look back to the first of the year on that chart to now, you can see that we have never crossed over with active inventory staying ahead of active under contracts and closed, which is making me feel like it's a more balanced market than we've seen the last year and a half. And I love seeing the increase of listings. I think these are all good things for agents and buyers.
It really is. Now, I will say, if you go to some of the other counties, it is a little bit different. It is what we're feeling, because I always tell people what you're feeling and what you're seeing. Sometimes they may be the exact same, or they could certainly be polar opposites, just depending on the market. But the other part that I looked at is we went down on coming soon. So if we looked at what's coming soon on the market, we kind of flatlined from where we were at the beginning. We had an uptick maybe around the mid of the month and towards the tail end, but I'm sorry, where am I? Here we are. Okay. But then we flattened back out to 31. So I thought that was a little interesting to see, just an uptick of what was coming soon on the market. And then, of course, looking at what we have pending, and then our closed units kind of leveled out right where we were at the start of the beginning. Was there anything in here that also stood out to you, or anything else that you would add?
It's interesting, Toya, looking at the expireds and withdrawn 48, 46. That's a little higher combined number than we've seen just a little bit in the past. So that's very interesting too. Maybe we're getting to an overpricing stage a little bit, and seller expectations are not being set in the exact market of the moment. Just a thought to keep on that track and watch that statistic as we move forward, because we've got to have those real conversations with data with people about exactly what's going on in the market to get it right.
I think you're exactly right. If we looked at, I've been asking agents, well, what are you going after? Because I feel like right now we have to have a potpourri of different things that we're doing in terms of, trying to find those sellers. And if you think about it and look to see, where there was a significant dip, it was in the expire, but then we were right back up. So to me, I look at those as opportunities. Those are the opportunities, although someone's losing on one side of the coin, on the other side of the coin, this is an opportunity for us to come in and maybe pick up some of those markets. Our fearless leader has joined us. Hi, Brett.
I'll leave the excuses out of it. I just tuned in for potpourri, and I think that's the funnest word ever. Here's what I'd add to the numbers, and I think this is an important perspective. Matt, are you driving the ship here, or is that Toya?
Oh, that's me. I'll release it.
So if you look at here, release it and let me share.
All right.
Somebody's gonna have to let me share here.
I stopped sharing, so you can share.
There we go. All right. So if you look at these graphs, so right here, we've got 672 active listings. If you go backwards, this was 620, 630, 653. You got to go all the way back to November 1st to get the same amount of active inventory. So to me, that's November, December, January, February, March, April, 6 months to have the same amount of inventory we got today. That's a story every buyer needs to hear right now. There is more inventory right now. If you've been on the fence, than there's been in 6 months. Let's go. Put on your shoes. Let's go. DeKalb County, they were 433 here. I think 7 months since it's been this high. Cobb County, it was 416. You got to go all the way back to October 25th. If I go out to Gwinnett, we don't even have data tracked that high.
Mm-hmm.
Right. And if I get out to like Henry County, they're at 75. You got to go all the way back to October too. So I don't think there's too many specific counties. Maybe Fayette is a little bit down. Douglas is 88. Yeah, there's a few back a couple months ago in Douglas, but most of the bigger counties that have scale, you can take that flag back to your pipelines and say, we haven't had this kind of inventory in 6 months. Let's go. And the other thing that I think is important to just keep your eye on, and I think you might have already said this, I'll just give my spin, is when inventory starts climbing, you got to ask yourself, does that mean we're selling less houses? And if I'm looking at active contract, under contract, pretty consistent. Pending, pretty consistent. Closings, a little bit down, but still pretty consistent compared to what we've been doing. So this is Fulton County. So at the end of the day, you can look in each of these counties and check active contract consistent, pending consistent, close consistent. Okay, inventory is really going up. That means actually more houses are coming on.
Yeah.
And I think that's just such a important point to make. And maybe y'all already said that in the 2 minutes before I got on.
About 5, but yes, you're absolutely right.
Oh, she's going to point that out. All right.
Now, the only thing that I would add to this graph, to this actual, the template, is keep in mind when you're going to the south side, this is pulling from FMLS data. A lot of the other south side counties like Henry County, some maybe Fayette, definitely Clayton County are going to use Georgia MLS numbers. So the numbers may just be just a little bit off. However, I would say you can always go to Georgia MLS and the hot sheets, they give you all of that data as well. Perfect.
Thank you for bringing that up.
Yep.
All right. So actually, I was hanging out with Toya in her team meeting.
Yeah, you are.
One of her closing attorneys made a comment and I went, huh? And then I saw this article. It says, foreclosure filings are up 132% from a year prior. First of all, I think that's clickbait. But here's what I think you need to pay attention to. how many people in the last 2-3 years bought a house with 3% down FHA, 5% down conventional, 100% financing USDA or VA, and when they bought that first home or a home, they maxed out their debt to income ratio, meaning they bought at the top of their pyramid. And I think price appreciation's probably gone through the roof. You got 20 to 40% price appreciation that's happened in a lot of areas over the last couple of years. So when those values reset in the taxing authorities, what happens to the mortgage payment?
They go up.
It goes up. And if you take somebody that maxed out their debt to income ratio and their mortgage payment jumps $500, $700, they could be distressed. Now, and also on the back end, you got inflation taking a toll against their personal, just disposable income. You could have some distressed homeowners. I hadn't thought of it that way. Now, I don't think they should ever foreclose because there should be enough equity. And if they're in relationship with a real estate agent they trust that's counseling them, they should sell in times of distress. But you know, like I do, there will be homeowners that'll hold on too long.
Yep.
And there will be short sales. There will be foreclosures at some point in the future. And it's just a sad reality of our business. So price appreciation actually could turn negative at some point. You realize that. And we're all excited about it on most fronts, but it could come back and really bite somebody if they were maxed out, which, you know, you sell houses. What percentage of them max their debt to income ratio out to get into that house? A lot.
A lot.
So it's just a conversation around that. Toya, what would you add?
You know, I always look at everything with the silver lining. And again, I look for opportunities. And in tight markets, that's where you really can capitalize on terms of helping people. And I think that this is just another opportunity for us to help someone that may, before they get to foreclosure, they may want to have the option of a short sale. And if you were anywhere in real estate, you know, when the bubble burst, we actually had to learn and kind of, you know, work with people in terms of doing short sales. So I think that that's an important conversation. But again, you're helping people before they get to foreclosures. So as we're contacting, you know, off-market properties, just know that we have a service to do, and that may be something that you can help, you know, someone be able to come out of.
There you go. I just had this updated 20 minutes ago.
I wanted to add something, Brett. if
Yeah.
that's okay. I would say this is also a good time to have a conversation with our database, because if they do have a lot of appreciation, maybe they're at a point where their mortgage insurance can drop off and they can refinance. So also having that conversation.
Value add.
Yep.
There you go. Big value add. All right, so I just had this updated like 20 minutes ago, and I'm going to throw a caveat at this, but here is the maroon bar shows the monthly home sales in Metro Atlanta. And look at what happened in April. So 2020, huge jump in 2021, went back to pretty much the same level as 2020 in the month of April. Big gap, right? Look at the dip in March. We were up in February and more or less consistent in January. So I'm keeping my eye on this every month. Now, hashtag asterisk fine print. I think there are a lot of transactions going on outside the MLS.
Yes, I would agree.
So as much as I want to trust this, it's probably somewhere in between here. Okay, but I guarantee it's still down from what it was a year ago. And what I'm seeing is 2021 was a little bit of an anomaly year in home sales. But the reason that's important is because you're going to hear news media go, oh, we went backwards 10%, or we're slowing down, or da, 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 and you need the perspective, right? it's not just this year versus last year. You need the wider scope of where we've been and where we're coming. Make sense? Any thoughts?
Matt, you were going to add something. I thought you came up off mute for a minute.
Brett got me with the off market. I think that was a great point. And again, I think we also have to realize that this feels a little bit more like a normalized market when so many newer agents who haven't been in the market pre-COVID may not remember what a normal seasonality market feels like. So we need to keep that in mind as well.
100%.
Agreed.
All right. This was Atlanta Agent Magazine. This was their scorecard. So a year ago, interest rates were 2.97. They're at 5.11. I'll leave that there. Pending home sales went from 113 to 103.7. You see a 10% slip. That's what I was talking about. Builder confidence went down. I'm not shocked at all on that one. And by the way, these are national numbers, Unemployment went from 6% to 3.6, which is a good thing. We want people to have employment. Locally, unemployment went from 4.4 to 3.2. Just look at the comparison of the national unemployment versus the local. We're a great place for people to have employment. People, if you want a job, you can usually find a job here. Housing starts. We're starting more new construction. Existing home sales slipped backwards. See it?
Yep.
And then housing inventory is a little bit down, but we've been talking about that. That's starting to come back up. And that's a good thing. And then obviously days on market, I don't think that's anything anybody's really talking about these days, because it's pretty much list it and hold on for dear life, right? But I thought it was an interesting a scorecard. Anything stick out to you guys?
The only thing that I would say is just keep in mind, you know, the interest rates are relative. That is a normal market for us. As a matter of fact, we're still below 6 to 7% is normal interest rates. And if we think about historically going back, you know, 30 plus years ago, there were interest rates almost to the point of 13 and 16%. So yeah. I just think we have to continue to keep it in perspective. Although we're seeing the market slow down a little bit, it's got to balance out. Natalie?
I thank you. And I'm just wondering, what conversations should we have? Because that's usually what I combat it with when people say the interest rates are high, and I'll say, no, we're actually normal. And I'm going into my 7th year. So I remember when we were getting around 6%, and I would explain that, but then the response usually is, well, houses weren't this high. So I just want to know, like, what would you suggest would be a good response to that question or that response?
Yeah, I think to me, and then we take it from anybody, to me, I'm going to explain to them the two-handed approach. Hey, a year ago, you might have got a 3% interest rate, but the reality is that you and I are going to sit down at Starbucks. I'm going to tell you, we're going to have an extra $30,000, $50,000 cash to get into a property. And by the way, that was over what it was worth. But today I'm going to sit down and talk to you and say, hey, you might be paying 6% interest, but that $50,000 cash I was going to tell you were going to have a year ago, you get to keep that in your pocket. And by the way, I'd almost bet at some point in time, you'll get to refi that down the road. So you won't pay 5% for 30 years. You might pay it for 4 and then refi it.
I think I think that's a great lead in. People don't know what they don't know. And I always like to use third-party information, Natalie, and anyone else, you know, who is hearing that information. That's why I think statistics are just so amazing in order to say, this is where we came from, because they're going to take your word for it. But when they can actually see the numbers, people want to know that they have a good deal. That's it. They just want to know, am I getting a good deal? And can I afford it? So there are two conversations, affordability, and yes, it is still a great deal, not a good one, a great deal. And I love the two-handed approach that Brett shared. Absolutely. You know that they were paying over 50,000 last year, this time.
Well, it's like, I remember at one point in time, I bought a car and it was when they were, all of a sudden it was 0% interest. So you either got the rebate or the 0% interest. Well, most people took the rebate because they wanted cash. But the reality is 0% interest was a better deal. Well, this is the reverse of that. Now it's keep your cash, pay the interest rate over terms. You can write it off against your taxes anyway. It's actually, it's better long-term.
Brett, can I add something?
Yeah, please.
I just think it's, we need to remind clients that a 30-year fixed rate mortgage is not the only option. We have been in 30-year fixed rate loans for the past couple of years because rates were so historically low. It made sense to lock it in just in case. But the average person in Atlanta lives in their house for 7 to 10 years. So a 7-year or a 10-year ARM, which are both in the fours, is a really valid option for a lot of buyers.
Yeah. And I think it's going to become more and more popular. And speaking of, so mortgage is going to be the battleground in 2022. And here's the thing, this doesn't necessarily directly affect us, but it absolutely does. And here's what I want to just say about this and then get the commentary from the smarter people on the call. A lot of mortgage lenders were making a lot of money off refinance over the last few years. They have since laid off a big portion of their employment, and they're all fighting for purchase business right now. And now throw investor money, throw venture capital behind that. You're going to see a lot of mortgage companies trying to do innovative and creative things and advertising. I think you'll see a lot of Zillow Home. I think you'll see a lot of Rocket Mortgage. I think you'll see a lot of Power Buyer, buy the same as cash. I think you'll see just crazy stuff, right? I got an email from a lender that is the lender on a rent house I own in Texas, marketing to me from the lender to my primary residence in Georgia around the value of my home. Click here to find out more information. And there is the lending world is meddling in the real estate world. And if you don't know that, you need to know that, because the more mortgage companies become a battleground, the more they're going to meddle in our business, which just goes to get your database in line, be in heavy touch relationship with your people. And people want value information around their house, and you should be putting it in front of them every day. Now, the smarter people on the call, I'll leave it to you.
I don't know that I'm smarter, but I definitely
You
always
spoke
have
out first.
I think, you're absolutely correct. And we're also seeing a lot happening in terms of, I don't know if any of you all have experienced people buying property now with their cryptocurrency. We just had a closing in our office with that. And so I just think they're losing their ground. And so they're looking for other areas to play in. So I think you're absolutely right. This is the perfect time if you have not stayed, because we've talked about the iBuyers. We've talked about everyone who has touched your database already. That's just another player in the game that is touching our database. So it is just even more so prudent that we stay in contact and stay in front of them.
There you go. Matt, Mark.
So, right, he or she who controls the lead controls the transaction. And if they're meddling around on your clients are working on a mortgage site and go to start that process and then get scooped up by another one of their agents because you haven't stayed in contact, it's an easy way that happens all the time to lose your clients. So stay in front of them, stay in front of them, stay in front of them.
There you go.
And the other thing is, I think we always miss opportunities with when we are an agent on one side of a transaction, there's another agent on the other side of the transaction, but there's an 86% chance that agent isn't going to stay in touch with their client. So are you adding those people to your database, the people who bought your listing, right?
Hey, Brett, do you know what those people are called?
I told you I wasn't the smartest one on the call.
They're called orphans. They're orphans.
Orphans,
Orphans.
that's right.
All right. Okay, I'm going to make y'all smart for a second and just go with me on this. You're going to hear this term in the media over the next few weeks, probably. And it's called a yield curve inversion. And here's the simplest way to explain it. There is the cost of, or the return, depending on what side of the fence you're on, long-term money, and then there's a cost or return on short-term money. Long-term money would be considered 10 years or more. Short-term money would be considered like 2 years. So you realize the government has a 10-year treasury note and a 2-year treasury note, and they offer rates of return on if you were to give them money and to hold for 2 years or money to hold for 10 years. What is happening is in every rational thought, I give you money for 10 years, you're going to give me better terms over 10 years than if I give you money for 2 years, because you can use my money over 10 years and it should create a better return. Well, what's happening is they're actually giving better yields on short-term money instead of long-term money, hence the inversion. And all that's saying is people are betting short-term over long-term right now. And when that's happened in the past, everybody starts screaming imminent recession. And I don't know that I 100% agree with that, but this is certainly an economic term. And if you were smart and made an A in your economics class, like I did not, you might know more about this than I did. But bottom line is, when people start betting on short term over long term, it just tells you where the people feel the economy is. And I think it'll be in the news media. And do I think it necessarily means it's a reality? I don't. I just think it's a term that you pay attention to. And so hopefully I've made you smarter on what yield curve inversion is today, because it'll be popping. All right, last thing. And I'm excited to talk about this. So there is this thing called real estate syndication. And what real estate syndication is groups of people invest in small shares to big investments. And they invest as passive investors in large investing. So let's say a building downtown cost $100 million. Well, they have learned that it's actually easier to raise money by going to real estate syndication opportunity than to go into a bank and getting a loan. And so there's a lot of opportunity about investing in real estate syndication. I'll give you an example. A group of people in the heart of Atlanta that I'm a part of, we invested in a Zaxby's in Kennesaw, Georgia. And the Zaxby's was a couple $1 million. I think we each put in $5,000, and we probably owned that much of that Zaxby's. But it was a real estate syndication investment opportunity. And you're going to see more and more of this, I think, in the future, because I think they realize that syndication's a big way to go, how to get financing done. And as a passive real estate investor, it's a way for your money to make money for you, and it's wealth building. And I'll pop this article here in the chat, but at the end of the day, real estate syndication is a big hot topic. And it's certainly before us of what real estate investing looks like in the near future.
And I love it. I think it is absolutely the way to go. You don't have to have all of the risk, and you get a portion of the reward. and the syndicators actually do the work. So basically you are just helping to financing it. Of course, you look at the criteria and make sure that it meets your needs. But I do believe that this is the way of the future for investing. And now you can build a bigger portfolio, investment portfolio.
You become part of the institutional capital we talk about.
Yep.
May I ask, do we know of some big syndicators that are active in our market residentially right now? And if so, who are they and what are they buying up?
They're not residential outside of big multifamily. These are multi-million-dollar deals. So they'll flip a 260 unit apartment complex, or they'll take down a Zaxby's or some kind of commercial development.
Gotcha. Okay.
It's not buying and selling houses per se. There are some, but
I was going to say, Brett, I saw something and I can't remember, Terry, where I saw it, but that's coming. That is also coming. I saw something where they were building multi-million-dollar homes, like in Los Angeles and different places, and you could invest $100 was the minimum. But again, it's all of these things it's a new way of investing. And so looking for those things, I'm sure those are opportunities as well. I can't remember the name of it, but I did run across that not too long ago.
Yep.
Thank you. I'm just scratching my head going, it seems like a bite has come out, the graph you just showed us, a bite has come out of the closed transactions, off-market bite,
it has, but I don't think it's necessarily I think it's just people are doing a better job of matching buyers and sellers before it ever hits the market.
So you think it's
And-
just individuals?
Yeah,
Okay, that was my question. Thank you.
100%. All right, guys, happy Monday.
Happy
So-
Monday.
Quick announcement. We're probably going to move industry update to a once a month big hour-long stats presentation, and then do videos in the weeks in between. So you'll instead of actually being at 2:30 every Monday, you might get a video at 2:30 every Monday, and then you could watch it whenever you wanted to. And then we would have a big presentation once a month around all the statistics. What do you think of that? Of course, all y'all are gonna say, hell no, because you were on the call going, we like showing up.
I like this format.
I understand.
I like this format too. What about every other week? Is once a week becoming too strenuous?
That stuff happens during the week, during the month.
We want it all, Brett. Come on.
I understand. Send all your complaints to Mark. All right. Bye, guys.
Have a good one.
Thank you.
Thank you.
Thanks, Brett.